Forex is plummeting, down nearly 1% this week, with a rising RSI of 66 signaling a bearish trend. Central bank decisions are the key catalyst. This is what every serious investor needs to know about Forex right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, we are navigating a market environment characterized by elevated uncertainty, as evidenced by the VIX index at 26.8, indicating a heightened sense of caution among investors. In this context, the Forex sector is presenting an interesting dynamic, particularly when compared to the performance of the S&P 500 this week. The US dollar index, as tracked by the sector ETF UUP, is down by 0.75%, which may seem minor, but it is significant in the context of the current market regime. The Forex sector deserves attention right now because it is heavily influenced by the ongoing shifts in monetary policy and global economic trends, making it a key area to watch for investors seeking to diversify their portfolios. As we delve into the specifics of the Forex sector, it is essential to remember that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The US dollar, as represented by the UUP ETF, is exhibiting a bearish signal, with a recent weekly decline of 0.75%, despite being up 2.18% over the past month. The RSI reading of 66 implies that the dollar is approaching overbought territory, which could lead to a potential pullback. This momentum shift suggests a loss of conviction in the uptrend, and we may see a period of consolidation. The trend direction is still higher, but the conviction is waning, indicating that key support levels may be tested. Resistance levels, on the other hand, may serve as a ceiling, capping further gains. The current move does not appear to be a sustainable breakout, but rather an extended overreach, which could lead to a correction. A key technical setup to watch this week is the potential for a pullback to support levels, followed by a bounce, which could indicate a period of consolidation. This could be a crucial test of the dollar's strength, and a failure to hold support could lead to further declines. Now let us look at the fundamental catalysts driving this sector. The Forex sector is poised for a volatile week, driven by fundamental drivers rooted in general macro conditions. As we look at the key stocks, the DXY, Euro to US dollar, Pound sterling to US dollar to Japanese yen, and Australian dollar to US dollar, we can see that the sector is experiencing elevated uncertainty, reflected in the VIX at 26.8. This week, macro tailwinds, such as a potential shift in monetary policy, may support the USD, while headwinds, including geopolitical tensions, could weigh on the sector. The key stocks are signaling a mixed sector health, with the Euro to US dollar and Pound sterling to US dollar under pressure, while the US dollar to Japanese yen is holding steady. There are no major earnings reports, but regulatory news and macro data, such as inflation numbers, could significantly move this sector. In the longer term, our fundamental thesis for being positioned in this space is centered around the ongoing impact of macro conditions on currency valuations. The EM currencies are likely to remain under pressure due to external funding concerns. Overall, the sector's dynamics are being shaped by the interplay of these fundamental drivers, and investors need to be aware of the complex landscape. Next, let us talk about the specific risks you need to manage this week. As we navigate the Forex sector this week, investors are faced with several key risks, notably the ongoing uncertainty surrounding central bank policies, geopolitical tensions, and the potential for sudden shifts in market sentiment. Given the current volatility environment, with the VIX at 26.8, it is essential to carefully consider position sizing to mitigate potential losses. Unexpected headwinds, such as surprise rate hikes or escalating trade disputes, could significantly impact currency markets. To manage downside exposure, a disciplined framework is necessary, incorporating elements such as stop-loss orders and regular portfolio rebalancing. This educational content is not financial advice, and it is crucial to approach Forex investing with a clear understanding of the risks involved. By taking a cautious and informed approach, investors can better navigate the challenges of the Forex market. And now for the strategic outlook, where does Forex stand heading into next week? This week in Forex, we remain cautiously positioned due to ongoing volatility, tracking the key theme of monetary policy divergence. Investors should monitor central bank decisions, as they will significantly impact currency pairs. Remember, this is educational content and not financial advice. For more insights, like, subscribe to Financial Market Oracle, and comment your Forex watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.